Good morning, ladies and gentlemen, and welcome to the show. Listen, normally I do a market report and I put, how I always say, now here's the charts. Let's open the charts. Not this morning. This morning we'll just talk to you guys a little bit. Now, I will do a brief summary of what's going on. Gold and silver today. Silver is riding still in its range. Silver's at 1755. Gold is at 1504. Cryptocurrency is going along sideways today, and the Dow Jones is up a little bit. And U.S. Treasuries are a mixed bag. Some are up a little bit, some are down a little bit. And the U.S. dollar index is going along basically sideways. So I'll tell you guys a little story about what happened years ago. My grandfather used to go to bid on cars down in a place where they had an auto auction. And the reason why he'd bid on cars was because my dad and my grandfather were in business together, and they had a little used car lot, and my dad would fix the cars that were damaged, insurance write-off kind of cars. Some of them weren't damaged that bad, and my dad could repair them and put them on for sale. So they had my grandfather and my father had a very, very tight amount they could pay. My grandfather bid on the cars, and he'd buy them, and my dad would fix them and resell them. So they had a very small profit margin. It's very small. So my grandfather had to be very careful when he bid on a car not to overbid it. But there was this guy that used to come to the auto auction to drive my grandfather crazy because he'd always outbid my grandfather on these cars. And it was just like he didn't care what he'd pay for them. He'd just slam his fist down, and he would outbid my grandfather by maybe $100. And back then in those days, $100 was a lot more buying power than it has today. Back when you could buy a brand new car for $2,000. And I was just a little kid, but I was observing all of this, what was going on. Well, I went along like that for months. This guy overbidding on these cars, and after a while, all of a sudden it ended abruptly. Because it was found out that there was a car theft ring going on, a car theft auto ring, where they'd steal cars. And what they'd do is they'd steal the same make and year that they'd buy at the auto auction, and they would remove the little tags off that the car had, where they had the numbers on the car, like up under the windshield, and on the door they would have a little stamp and sticker on the car where the numbers would be. They'd just peel those off or remove them and put them on the car that they bought, same make, year, and model, and they were switching out. So the car they would steal would be nice, brand new and shiny and no damage, and they'd go in and buy a car that was all smashed, and then they just switch the tags around and resell the car. And so they're a bunch of crooks. And so when I was a kid, I got to observe this crooked behavior and what the results were from dishonest money. You should, dishonest money, and if you're not making money legally, you should go to jail. Well, the way I see it, this worldwide, global, generational Ponzi scheme is hyperinflating, and it's like that side of the system. Now, I'm not suggesting any impropriety here in the part of the system, but it's the way the whole system is geared right from its very start, where they can create unlimited amounts of money through a Ponzi scheme sort of a deal, right? That in comparison to real hard, honest money. And I see gold and silver as being the only thing in the whole system that stands out to me as being hard, honest money that is made through sweat and labor. Now I'm talking about the real physical metals. And what I've learned through life is, when you have to work really hard to make your money, it doesn't come easy. That's the good money. That's the honest, hard, worked for money. But when you just go into a computer system and you type in any amount of money you want and hit enter, and that money pops into existence, that's not hard, honest, earned money. And what if they keep doing that and creating that kind of dishonest money and pumping it into the system, ultimately in the end, it'll end very badly. And how it's going to end is everything getting pumped up artificially, and then the bottom dropping out from under all of it. And that's what we see this heading to. This is heading toward a culmination very soon in the very near future, where the bottom's going to drop out of the system, and everything is going to start to be marked to market. And what that basically means is, it's kind of like valuations are all been pumped up with the system as well. Like an awful lot of businesses and stuff, what happens is they get what's called from the bank like a floor plan or whatever, and the bank comes out and they evaluate the whole situation of the business. Like say if a guy has a department store or whatever, the bank will come out and they'll inventory all the merchandise, and they'll take a look at the building, and they'll assess the appropriate value for everything, an itemized evaluation of what everything is worth. But during a period of mark to market, it's not what things are valued at in good times. What happens is what are people actually willing to pay for what you have when the economy collapses is a totally different number than what the valuations are during good times. These valuations can just fall through the floor. And everything can deflate. And this is what the central banks are actually fighting against right now. It's this sort of deflation. And this is a very powerful force, deflation, or a deflating of the system. The property markets, the real estate markets around the world right now are primed and ready to deflate. This is a tremendously large mover. It's like a train, and it's big and powerful and heavy, and that's what the real estate markets are in the system if they start to delever or deleverage, because they've been pumped up on this funny, easy money, they're basically asset bubbles. But it's not just the real estate market. The bond market right now is in what I would term a hyper bubble, because they've deemed it as a safe haven asset, and so all this funny money that they've printed is poured into the U.S. Treasury market specifically, and other Treasury markets. It's also poured into corporate bonds. We actually, quite literally, in places in Europe, I believe I heard that corporate bonds are actually with a negative yield. This isn't gone into the point of being in bizarro land. Any negative yield, even on a government sovereign bond, is bizarro land, because this defies all the conventions of money. Generally, when you hold money for a period in time, you're supposed to collect interest on that. You're not supposed to have to pay somebody to hold money. This has gone beyond bizarre. And when you get these negative interest rates, so on the other side of this, you got credit cards and stuff. You guys got credit cards. They're charging you like 20% on the credit cards, while on your savings account they're going to give you less than nothing. And now they're talking below zero interest rate policy. It's bad enough zero interest rate policy. I believe they call it NIRP, negative interest rate policy. Anyway, it's gone to the point of being retarded. All of this is actually going to end extremely badly, and it's going to end quickly when it ends. Now, it all kind of needs a trigger event to get this ball rolling of the whole thing to come to an end. And what's going to happen is it's going to start to deflate. They can't let that happen, the central banks. Now that they're in control and they're the big cheese, when the system actually starts to deflate, we're going to see exactly what we saw happen in the overnight, the repo market. So that part of the system started to deflate and interest rates started to go up really high on the overnight rate. What did they do? They stepped in with as much liquidity as was needed to prop it up. Well, the same thing applies when these other bubbles start to break, like the bond bubble starts to break, the real estate market bubble starts to break, and all these other bubbles simultaneously start to break. They can't let them deflate because ultimately the conclusion of that would be a nightmare scenario for the world's central banks. It means if they were to allow that to continue and allow the system to actually deflate, which is actually in truth what the system needs. It needs to filter out all the bad. The system needs to filter out all the bad, and how it does that is through the process of a deflation or a crash. But they can't let that happen now at this point. They've grown this into a monster that's out of control, and they can't allow it to deflate because they would lose power. They would lose power over the system. So not only are we on the line if they allowed it to deflate, if they allowed it to go too far into deflation, not only would we be on the line, in other words, the crisis would affect us on a very personal level and very profoundly, cataclysmically, but it would affect them too. They would lose power. So they can't allow that to happen. So the only other alternative to that is to continue to pump the system up. But in order to pump the system up, because the system has become into a point of diminishing returns for every dollar invested. Used to be for every dollar they invest, they get a certain amount back in these investments. Now they're getting almost nothing back. In fact, the system is turning into a spaghetti sieve. A colander full of holes. So money is like liquidity. It's like the gas for the system. It's like they pour the money into the system and it runs through all the holes quicker, and it's gone. And then they need to pour more in. We're getting to a situation where, as a collapse starts, the amount of money that's going to be required to actually stop this collapse, and they have to stop it. And they've shown you already that they're going to stop it. Look what happened in the repo market. Can you imagine $75 billion a day? In 20 days, that's $1.5 trillion. $75 billion a day to dump into the repo market. This is them showing you what they're going to do. Except as the system starts to collapse, they're going to have to do it more and more and more. Bigger and bigger and bigger. And this is what's going to lead us into the hyperinflation, because the real fact of the matter comes down to the core essential nutrients of this. The core essential of this is they can't let the system collapse into deflation. They can't let it happen. Ben Bernanke said it best. He said if we have to, and he was talking about the Fed, and he was chairman at the time, and that's why he got called Helicopter Ben. He said that we will dump money out of helicopters. In other words, they'd print up billions of $100 bills and just pour them out the window of the helicopter to cancel the effects of deflation. This, what they're telling you is, and they're telling you clearly is, that deflation will never run out of control. Because they have the cure. The absolute cure. They got the penicillin for deflation. But they don't have the penicillin for inflation. Because the more money that's the only tool they really have. They have one tool. They know how to use it, believe me. But that same tool can't be used on inflation, because inflation, if they pour a bunch of money on it, just makes it worse. It's kind of like an electrical fire, You don't put water on an electrical fire to try to put it out, because it just makes it worse. Same thing with a grease fire, by the way. You ladies out there, if you're in the kitchen, never pour water on a grease fire, okay? Just a word of advice. By the way, just a suggestion. Keep a fire extinguisher in your kitchen. It's a really good idea. And keep the kind of fire extinguisher that works on grease fires. Just to update for you guys. But back to the subject. pouring money into an inflationary environment just makes it worse. So when this inflation finally actually gets really going and really underway big time, and I'm not talking about the little bit of inflation we got right now, I'm talking about when we start to get profound inflation. It starts to run away because the people out there all of a sudden start to lose confidence. And then the inflation gets worse, and the system, because it's starting to break apart, they're having to pour more money in, and it's just making it worse again. And what we actually head to in the end is what's called a hyperinflation. A reset finally does happen. Now, I know you guys heard a lot of talk about resets. The reset's coming, the reset, the reset. The reset's going to come at the end of the hyperinflation, when the money starts to become worthless. This is what they always do. They always reset the money. But in this case, we've never been through a worldwide hyperinflation before. We've never seen a worldwide hyperinflation. During hyperinflations, there's always some other currency that they can reach out to. Generally, it's the US dollar. But what happens when it's the dollar that's hyperinflating? What do you reach out to? And believe me, it's just like a guy that falls off a boat into the ocean, and he's drifting on the ocean. He's going to reach out for something. And that's what they make those little round things, those little round life preservers for. They throw it down to him and he grabs it. That's the same way with people that are experiencing a hyperinflation. They reach out or they grab to something of value where their money that they used to use is sinking. And so in this case, when it's a dollar that's going down the tubes, what do you reach out and you grab? Well, you can't grab these other fiat currencies because in 1971, the dollar was pegged to gold, and all of these other fiat currencies were pegged to the dollar. Nixon came along, and he cut that umbilical cord, linking the dollar to gold. And when he did that, not only did the dollar float free, and was free to go where it wanted, all the other fiat currencies that are pegged to the dollar are free too, and it's all been a free system now. Free for them to create as much money as they want worldwide on all these fiat currencies. So when the dollar goes down, all these fiat currencies are going to go down with the dollar. And so people have to always have something to reach out to, the value. They're going to reach out to gold and silver primarily. But once the gold and silver, because believe me, if the whole world is reaching out to gold and silver, you're going to see it disappear. Especially silver. Not going to be able to obtain it anymore. And so then what are they going to reach out to? After the gold and silver's gone, you can't buy it. And people are desperate to get out of their physical dollars because those dollars are just going down the toilet, What do they reach out to? They're going to head to cryptocurrency. After they've got all of the gold and silver gone. It's basically gone. The way I see it in my mind, I form things in pictures. Picture a picnic. Some old lady's made a bunch of pecan pies. She's expecting a big crowd to come in for this event. Maybe it's a family reunion or whatever. Hundreds of people are going to be coming. She's made like 5 pecan pies. And then they've got a big pot full of corn. Well, picture the pecan pies and the chicken. Maybe they got some Kentucky Fried Chicken and pecan pie. Picture that as being gold and silver. Silver's the fried chicken, and gold is the pecan pies, But the big pot of corn over there, that's your Bitcoin. So you got this hungry, ravenous crowd. I mean, they come in to this picnic or whatever, family reunion or whatever, and there's hundreds of them. And they're just ravenously hungry. And you know how quick that chicken and pies goes? That's what they go for first. The corn's still sitting over there. They're not eating it yet. Because they're after the pecan pie and chicken. And they're eating it up like crazy. But once all that pecan pie and chicken's gone, they're still hungry? What do you think's going to happen to that corn? And this is the way with cryptocurrency. And anyway, listen. Talked enough. Thank you guys for listening. Give me a thumbs up. We'll catch you guys in the next show. Bye bye, guys.